If you're like millions of Americans saving money into a 401k plan for retirement, in this video, I'm going to teach you how to figure out how much income you can expect to receive from that 401k in retirement by using a very simple and free online 401k calculator. You're going to Google Moneychimp 401k calculator, and you're going to click on the very first option that pops up. I'm going to walk you through two different scenarios on how to use this calculator with data that's out there about what people are currently saving into their 401ks, looking at somebody that's in their 30s and someone that is currently retiring today. According to Investopedia.com, data from Fidelity says that the average 401k balance for people in their 30s is $38,400, and they are contributing an average of 8% of their income. According to Entrepreneur.com, the average 30-year-old makes about $58,000 a year in America. So for sake of easy math, we're just going to round this up to 60 grand. So if you take 60,000 times 8%, that means the average 30-year-old is contributing about $4,800 per year into their 401k. But wait, there's most likely going to be a match, right? Most companies today are offering some kind of an employer match, and the average match ranges between 3 to 6%. So for sake of easy math, we're going to assume that they get a 5% match. 60,000 times 5% means they're getting a $3,000 per year employer match added into their 401k. Now, if we plug all of these numbers into our Moneychimp 401k calculator, we will start with a current balance of $38,400 a year. And as we mentioned before, you're contributing an average of $4,800 per year into this account. And this is assuming that we don't increase that or we don't reduce that at some point, right? Obviously, that could be the case, but we're going to keep this simple. And then we're going to add in the $3,000 per year employer match, again, assuming that in all years. And let's assume that you're 35 years old. Maybe you plan to work until you're 65 years old. So that is 30 years of contributions. Now, in terms of investment rate of return, Google AI says the average investment rate of return inside a 401k is somewhere between 5 to 8%. So let's assume that we're going to get an average 7% through all years of us owning this plan. Keep in mind, when you're younger, you're going to earn higher interest because you're in more aggressive investments. And when you get older or closer to retirement, you're going to be earning less interest because you should be in more conservative investments. Now, if you think you're earning much higher than 7%, maybe 8, 9, or 10%, per year, you also have to remember to factor out the cost of fees. Fees on average in a 401k are somewhere between 1 to 3% per year. So if you just simply deduct fees, can we all just agree we're going to look at a 7% rate of return? And when you click calculate, that's going to give you an estimated ending balance of $1,080,000 at retirement. The next part is where you get to calculate out how much income you can expect to receive in retirement. The software comes preset at a 5% investment rate of return. Now keep in mind, you're in retirement, you should be in things that are more conservative. Even if you think you're earning more than 5%, I would just keep it at 5% because you still have to subtract out fees and you always want to err on the side of caution. And then it also comes preset at 30 years to pay out, meaning estimating that you're going to live for 30 years in retirement. I usually reduce this down to 25 years, assuming that you will live from age 65 to age 90. And then it also comes preset at a 25% income tax rate. Now, this is where people get super heated because it depends on what you expect to happen to taxes in the future. Do you think they're going to go up or down? I usually recommend leave it at 25%, click calculate to get an idea of the income stream you can expect to receive. Then you can come back and update or adjust the tax bracket later. Okay, so now if you actually click calculate, the software is estimating that if you had a $1 million balance in your traditional tax-deferred 401k at retirement 30 years from now, that is estimated to pay you an income stream of $73,000 every single year pre-tax, minus the 25% in taxes that we put in, which is about $18,000 a year. That would net you just over $54,000 a year in income after taxes in retirement. Okay, now that we know that we're estimated to receive $73,000 a year pre-tax from this account, we can actually go out there and do the research to see if the 25% tax bracket makes sense. So all you have to do is go to Google and Google Federal 2025 tax brackets. A bunch of options will pop up. I typically just click on NerdWallet and you'll see a huge chart appear. And if you're single, making $73,000 a year pre-tax, if you follow the chart, that actually means that your income is falling into the 22% federal tax bracket. But keep in mind, the federal tax brackets are marginalized, which means you're not paying 22% on the entire $73,000 a year. You're only paying 22% on an income you earn above $48,000 a year if you are single. And that follows suit in the other tax brackets. So, just to make it more confusing, how do we figure out what is our average tax rate that we're paying for federal taxes? Well, if you go to bankrate.com, you can actually plug in your gross earned income and your tax filing status. So we're just assuming that we are single, and that actually calculates out and tells us that we're estimated to pay an average of just over 12% per year in federal taxes. Now, you still have to subtract out state income tax. There are 9 states in the United States that do not charge an income tax. I have them listed here. Now, if you don't live in one of these states, don't worry. It's not like they're getting away scot-free. A lot of times they have higher property taxes, car insurance, things like that to kind of even it out. But if we just try to figure out what's the average state tax people pay, it's difficult because there is state tax ranging from 0 to over 13% if you are a high income earner in the state of California. We're going to rock with an average of 6% in state income tax. If you actually know what yours is, go ahead and plug that in. But for the sake of this example, if we take the 12% in federal plus the 6% in state, that's going to mean we're paying an average of 18% per year in income tax if you're making $73,000 a year gross income 30 years from now. Now, this is also assuming that the tax brackets don't change or go up or increase in the future, as they might. Now, if we go back to our Moneychimp 401k software and change the 25% in income tax to 18%, that means you're going to get an additional $5,000 a year coming into your household in retirement, woohoo, which is going to increase your net income to just shy of $60,000 a year. All right, we've got one final step to make this really realistic because, again, remember, we're projecting forward 30 years. So what you need to do is take that $59,881 in net income and plug that into an inflation calculator and see what is inflation going to do and make the value of that money actually worth 30 years from now. So if you go to the Bureau of Labor Statistics website and pull up their inflation calculator, you can plug in at the top that $59,881. But we have to work this software backwards. So you're going to make the first number January of 2025, and then you're going to make the bottom number January of 1995. That means that you're subtracting backwards 30 years. And when you click calculate, what you're going to see is that $59,881 per year is going to have the same buying power as $28,331 today. Can you afford to live on that today? Now, keep in mind, this is assuming that we did not increase our contributions at all into the 401k over the last 30 years, which after watching this, you might want to. I know this is pretty shocking, but it's just a good wake-up call to see how much money we really need to be saving once we subtract out inflation. Okay, so what if you're ready to retire like today? Maybe you're 65 years old. According to Investopedia, information from Fidelity says that the average 6-year-old has a 401k account balance of $182,100. Okay, now if we plug that into the bottom half of our 401k calculator, assuming all the other presets stay the same, a 5% investment rate of return, 25 years to pay out 25% in income taxes, that means you could expect to receive $12,300 a year pre-tax in income in retirement. Now, I'll spare you all the math because according to H&R Block, if you're single and you make less than $14,600 a year, in 2024, you don't even need to file a federal tax return. Now, state taxes, on the other hand, that's going to be dependent on where you live. You may need to file a state tax return, but I bet you're probably going to get to keep the majority of that $12,300 a year after taxes. Now, if you have an IRA, you can use the exact same calculator, just take out the employer match. And if you have a Roth 401k or Roth IRA, just take out the need to subtract taxes in retirement. But I do want to caution you to always err on the side of caution for the investment rate of return because it usually never ends up being what you expect, especially after you have to factor out stock market volatility like we've been experiencing recently and fees. Now, if you want to learn more about 401ks, I have linked 2 videos here that will dive a little bit deeper into how they work. And as always, make sure you subscribe so you don't miss another video teaching you tips and tricks on what to do with your finances. And I'll see you back here next week on YouTube.